You know what's crazy? The world of investing has a secret formula that's been out for nearly a century, and yet too few people have the grit to follow it through. For Warren Buffett, that secret came from his mentor Ben Graham, and there's some core ideas that I think join their investment philosophies that I need to tell you about. Of course, this is not financial advice, but subscribe to the channel for more discussions like this, and let's get into it.
Ben Graham, he was your primary mentor, model?
He was a wonderful man, and he was my professor at Columbia. I read his book when I was 19 at the University of Nebraska, and I'd started investing when I was 11, and I started reading about it when I was like 7. So I'd gone through I read every book in the Omaha Public Library that there was on, by the time I was 12, on investing and stock market. And I had a lot of fun, but I never really found out, I never got grounded in anything. And it was entertaining, but it wasn't going to be profitable. And then I read Graham's book, The Intelligent Investor, when I was at the University of Nebraska. And that just opened the whole thing up to me. Yeah, and I named my oldest son is named Howard after my dad, Graham Buffett, and he was a marvelous man. Never expected anything from me in return. He just did all these things for younger people.
Ben Graham's idea of value investing is what has catapulted Warren's investing prowess to what it is today. Simply put, that idea is what lays at the foundation of Warren's patience in the stock market, because it takes the weight of judgment off the mere dollar number on the stock to the fundamentals of a business itself. And while that sounds simple enough in theory, the fact that so few have been able to replicate even a fraction of the success of these investing giants is evidence of how rare that financial discipline is. And let me paint you a mental picture of how important that is. Back in the days when Ben Graham and Warren Buffett were first investing in the markets, the information they had at their disposal about the companies and stocks was limited to the business newspaper or their quarterly reports. It was a slower influx of information from where it was easier to separate the wheat from the chaff, but can the same discipline carry forward in a world where a stockbroker app on the phone tempts you 100 times a day with fancy graphs and alluring buy or sell buttons? Investing is legitimately tied to information. It's a timely and correct information that leads to the right decisions, but the kind of value investing that Ben Graham preached could be said to have become harder ever than before given the noise around investing. But while I think that criticism has some weight to it, maybe there's a perspective we're missing. Investing is just about buying low and selling high. It's having a stake in the success of business failure, and while the thousands of new businesses and the noise of information may make that decision harder for the average person, the answer still comes down to what Warren Buffett was preaching and carrying it forward from his mentor Ben Graham. Investing is more about emotional IQ than mere financial IQ. Watch Warren say it himself before I tell you how it's still relevant even today.
A couple of quick examples of the things that he did that you will look back on. It's one thing to read something, but quite another to see it in action.
Well, but what he did was he got me thinking not as a stock as something with a ticker symbol that wiggles around and that that you look at charts on or anything. He taught me to think about it as part of a business, and that was vital. And he taught me not to really pay any attention to stock market fluctuations except when they were working in my favor, so that not to get elated because something had gone up or depressed because it went down. So if I knew the facts on something and it went down, I bought more of it, and because I looked at it as a business. And then he taught that famous lesson about a margin of safety, that you don't drive a truck that weighs 9,900 pounds across a bridge that says limit 10,000 pounds, because you can't be that sure about it. If you see something like that, you go down a little further down the road and you find one that says limit 20,000 pounds, and that's the one you drive across.
So he, in effect, taught you that stocks weren't just numbers. Numbers were shorthand for flesh and blood businesses.
Isn't that an interesting window into something? The same digitization that has made the market so incredibly efficient and quick at adjusting to new prices is also a kind of double-edged sword. That's because it has made it exponentially harder to find a stock significantly underpriced for its value, since information in the modern world travels at the speed of light. And those inefficiencies don't last long, so does that render Warren's idea of the margin of safety redundant? I know you'll be tempted to say so, but I think that we take the spirit of that advice and apply it in another way. Yes, it may be extremely difficult to find undervalued stocks in a fairly valued market, especially when thousands of businesses are popping in and out of existence every year, but that also means that we're thousands of businesses where there's opportunities for seed investment opening up. There's startups for which you have all the information you need while they're still in their infancy, which often large and seasoned investors simply ignore for bigger opportunity. Moreover, the mere fact that there's a flood of distracting information every single time means Ben Graham's fundamental idea is still true, which is that you can get ahead simply by ignoring the daily headline and sensational graphs by deciding to play the long game. That's what he taught Warren, and look how he turned out. There's a degree of peace when you trust in a company as it's placed in the larger context of the economy, rather than holding your breath every time a chart goes up and down. It's incredible once you think about it, because an idea as simple as this should be able to make a lot of people rich. But the sad part is that nobody wants to wait, especially not in a world where some idea of getting rich quick is taken over and nobody has any patience. For that simple reason, Warren Buffett puts Ben Graham in his work, The Intelligent Investor, as, quote, by far the best book on investing ever written.
The best investment I ever made, I bought a book in 1949 by a fellow named Ben Graham called The Intelligent Investor. I don't remember what I paid. But aside from what I paid for my 2 marriage licenses, that was the best investment I ever made. It's very important to have the right framework. You need to have an approach to investing that's sound. And Graham's approach is simple, but some people adopt to it, and which I did immediately, and most people don't. But if you have the right philosophy, you will find opportunities as you go through the next 20, 30, 40, 50 years. And frankly, you're most likely to find them when in periods like 5 years ago when we were having the panic. I mean, stocks sell at silly prices from time to time. Most stocks at one time or another sell at very silly prices. And it doesn't take a high IQ to figure out that they're cheap, but it does take a temperament that's willing to step up and actually act. I tell people, if they're going in the investment business, if you got 160 IQ, sell 30 points to somebody else because you won't need it. I mean, I figured out very early, you don't have to be that smart in this business, which is fortunate, but you do have to have the right temperament.
That's a seal of approval for a book from arguably the greatest investor of all time. And yet, what should excite you is that the lessons are simple enough, and all you need to do is put them into action, is to develop patience and emotional intelligence in the world of investing to become wealthier from the stock market. And that's where the gap for a majority of people lies who have become so accustomed to the traditional setup and attitude to money that they can't imagine a way for it to be different. Especially in a world as inundated as it is with noise and FOMO, too many people are tempted into treating investing more like day trading and gambling. The word itself should make it clear enough. Investing means you're truly investing in the success or failure of that company. You have a stake in it and have tied a part of your financial future to it, but that takes time and patience, which a lot of people today simply do not have. That shouldn't disappoint you. In fact, quite the opposite. It should tell you that the secret to building wealth is really just out there in the open. And it's up to you to forge that attitude and patience to eventually overtake the lazy or impatient investor that makes the wrong moves. There's no shortcut to wealth, and perhaps the wealth gained from a shortcut is not even worth having. The only shortcut in life is to drop every distraction and start doing the things you know you need to be doing. The sooner you do that, the sooner you'll start getting results. And let me know in the comments if you agree, because it seems to be a lesson that too many people today have lost while they wander around clueless in the world of investing.